Let's start at the beginning. In the middle of 2018, SIX made the announcement that it wanted to launch its digital exchange, and 1 year later we're sitting here and it's not off the ground yet. So maybe walk me through the process of what that journey has been like.
Well, I think a lot of parts are in fact off the ground. When you look at what we achieved in just over a year, we've gone from absolutely nothing to over 120 employees. We've got facilities just down the road from here, on the other side of Zurich. We've developed a prototype, we've opened a lab. So we've done pretty well in that sense. Mm-hmm. We'd originally said we wanted to have something that was testable by clients by the summer. We missed that a little bit. We did that in September with the launching of the lab and the prototype. So we're reasonably on track.
But why has it then been pushed to 2020? I think people were expecting something earlier.
There's a couple of reasons. One is inevitably things pop up that we didn't expect. That's, for something of this magnitude, not that unusual. One of the very important pieces is to get regulatory approval both for SDX as an FMI, or financial market infrastructure, but also for operating the digital assets and having the same level of investor and asset protection for digital assets as is currently the case for normal assets. So the regulatory side is very important, and we're working hard with the regulators on that. We're not yet where we need to be able to roll out, but that process is ongoing, and there are some drafts that the Ministry of Finance have actually set up so that we're comfortable with where we are in the process. Would I like that to be going quicker? Sure.
So where do talks with FINMA currently stand?
The talks with the FINMA, there's two parts to this, right? The one part is with the SIF, with the Ministry of Finance. They actually create the legislation. And then the FINMA enforces it and provides input into the legislation along the way. So it's actually a four-way dialogue that we're having here. It's with ourselves, it's with the Ministry of Finance, it's with the FINMA, and of course it's with the Swiss National Bank. So that is not an entirely easy process. The FINMA dialogue, as well as a dialogue with the other two stakeholders, is extremely constructive. But there are hurdles we have to go through to make sure that it can pass Parliament.
The SDX has gone through its first prototype most recently, and one of the newer announcements to come out is this new partnership with the SNB, or the Swiss National Bank. In very basic terms, what are you trying to achieve here with this cooperation?
The purpose of the cooperation, you'll have seen the announcement that the Swiss National Bank and the BIS have set up this innovation hub here in Zurich. We're working with them very closely because we've got a fundamental interest in ensuring that we get so-called central bank money settlement also in the digital world. The initial plan was and continues to be that we will have a stablecoin environment where cash, fiat currency, is held at the central bank, and we would issue a payment coin at a wholesale level within SDX to manage liquidity. What we're exploring with the SNB and the BIS in the Innovation Hub is to not do a commercial bank settlement coin, so not our own issued coin, but actually a coin issued by the Swiss National Bank, which is like a digital franc. Whether that proof of concept actually comes to fruition is something that we're exploring with them, and is the purpose of the work that we're doing with them.
What does that roadmap actually look like? You're testing this proof of concept. When do you expect to see the first results, I guess?
We're now working through with the various stakeholders what the roadmap and what the deliverables are, who's going to be involved in the project in detail, and so on. I know who's going to be involved from the SDX side and from SIX. What I don't know yet is exactly how the project is going to be set up with the input from the other two parties.
SDX is still considered sometimes a separate operation. There are separate offices. There is a dedicated team based not out of SIX but at the SDX offices. Do you feel that the project has enough wiggle room to operate on its own, or is it still very much a what SIX decides kind of project?
SDX is set up and was originally set up very consciously as a startup within SIX Group. The reason it's in a separate building is twofold. One, there wasn't room in this building. And secondly, as a startup environment, it thinks a little differently. There are very, very strong connections back into SIX Group. Clearly, overhead functions, HR, finance, marketing, the compliance activities, risk activities, all of that is based out of SIX, because that's part of the integrity of being a market infrastructure. The way they develop and build out the infrastructure itself on the distributed ledger platform, that they're doing on their own outside of the infrastructure of SIX.
And so Martin Harblub, who was actually leading that project, he departed. What happened there?
Well, that's very straightforward. Martin is an external consultant, was from the beginning. I asked him in January of this year to take on the leadership of SDX with a twofold mandate. The first one was to provide operational leadership in SDX. The second was also to identify what kind of candidates would ideally be running that unit going forward. And during the course of the summer, we went through the whole process of assessing, based on his experience on the ground, what did we need in terms of candidates. And at the same time, his mandate was running out at the end of August. He's only, because he's external, he's only allowed to work in Switzerland for a certain number of days.
Are there plans to find someone else to take over the reins or to take over his position?
Absolutely. We have a search ongoing at the moment. I have my deputy actually running SDX now, who's also thrown his hat in the ring for the search. He's a strong candidate, and we're also looking externally with a search consultant, and we'll be benchmarking everyone against that. So I'm hoping that over the next couple of months we'll then have the final decision on who is going to take it going forward.
You want to start off SDX by focusing on traditional securities at the beginning, but when could this open up to, say, passion investments? I'm talking about cars and paintings. Have you seen more people requesting that need on your part?
It's an interesting question, because we went into this back in mid-2018 with the hypothesis that the real value proposition was to tokenize existing securities and get the benefit of the greater efficiencies. You don't have to do reconciliations, all that kind of stuff. The dialogue with clients has shown us very clearly what they've said is, hang on a second, until the regulation is in place and until the banks themselves can move away from their legacy platforms, which is not something that can happen in a period of 1 or 2 years, the focus should not be on the traditional securities being tokenized, but rather should be on developing new securities which they can then provide to their clients. So what does that mean? That means new digital offerings which in some cases will be similar to an equity or a bond or a fund, but will also open up the route for art, for cars, for wine, for whatever else that wants to be tokenized.
So in a way, has the
priority.
business model changed?
The focus on the rollout priorities has changed, absolutely. The functionality is being built to tokenize existing securities, but it won't be deployed initially, because it really only makes sense to deploy that when the banks are ready to take that on in their own infrastructures, and when the regulation is in place that, for instance, a pension fund or a large insurance company or a bank investment unit can invest in, for instance, a Roche or a Novartis token and know that they have exactly the same rights as they do when they have an equity share. Today, that's not the case. So that legislation has to be in place to do that. Once that's in place, and once the banks are in a position to actually custodize and reflect this in their books, at that point we can deploy that functionality. In the meantime, we're providing the platform for new so-called native digital issues to be launched on SDX that will run in parallel to the traditional securities platform.
It's quite interesting because SDX is growing and launching at a time when there are more conversations surrounding this need for a tokenized economy. Where do you think we are with this stage right now? What do you think the next chapter of growing calls for this kind of so-called economy would look like?
I think at the moment we're at a stage where there is a little bit of mistrust in existing ICOs because there has not been a standard set as to how do you ensure that what you have protects investors. What we are doing with SDX is setting a standard which is very similar to the standard we have for regular IPOs on the traditional exchange and moving that across into the digital world. So there will be due diligence being done on those firms, and there will be a direct link between the token and the underlying assets so that there is a quality level that is assured on securities that are listed on the digital exchange. That doesn't exist today. Today you have a number of so-called digital exchanges that are little more than unregulated brokers. They're not regulated entities dealing in regulated securities. And that's a big difference. And I think we're at the moment in the in-between stage where there is no one yet offering that legitimate exchange infrastructure with all the regulation that is behind it to say, here we have an infrastructure that provides security, it provides investor protection, it provides asset protection, and it's somewhere you can trade securities with a degree of comfort and confidence.
And if I can jump in at this moment, if we take a look to neighboring Germany, we have Börse Stuttgart that has come out with a platform to trade digital assets. Are you looking towards other stock exchanges and taking cues from there as well?
I think what they're doing is a little bit different because their exchange is more retail focused. And again, it's focused on cryptocurrencies, the activities that they're trading. In our case, we're very clearly a B for B infrastructure. So our clients are not the retail investors, but the banks and other intermediaries, insurance companies and so on in between. It's quite different when you're providing an infrastructure for a B for B focus as we are doing, because then all of a sudden we're talking about scalability in a way that other exchanges perhaps don't need to worry about to the same extent. So do we take cues from them? We observe what they're doing. I think in a second stage, when it's up and running, there will almost certainly be cooperations with exchanges in other parts of the world so that we get to a common liquidity pool across a blockchain or a set of linked blockchains around the world.
And looking ahead, will digital asset exchanges be the norm, say, in the next 5 years?
I think 5 years is probably aggressive.
Next decade?
Over the next decade, certainly. I think the digitalization process of assets is inevitable. That is coming, whether it's passion investing, whether it's new asset classes that investors are looking to get exposure to, whether it's efficiency gains that come out of doing so, whether it's leveraging the technology of blockchain and DLT. All of these elements speak to an inevitability, to my mind, that we're going to see more and more of this activity.
And to put you on the spot, with all this discussion ramping up, where does this leave the place of traditional stock exchanges? Are they going to have to take the back foot in the future?
Not for a long time. Not seriously, not for a very long time. We think it's going to run in parallel, certainly to our exchange, for at least 10 years. If you think about what kind of timeline we're looking at, purely from a pragmatic point of view, once the legislation is in place, give it another 2 years for that to happen through Parliament and everything else happening. Then you have a degree of standardization across other markets as well. There's going to be a dialogue between regulators about what is the standard at a digital level. How do we define a token? Who can issue that token in what form, at what time, with what prerequisites. So you're looking at a timeline from a regulatory point of view around the world now of probably 3 to 6 years. In parallel, you have market intermediaries developing away from their legacy systems as they go through the end of life discussions around their legacy platforms, and they will start developing new platforms more geared to the digital environment. Say that takes also around 5 years. That would be pretty much normal. So at that point, we're then talking about 5 to 7 years would be a reasonable timeline for us to go back into the market and say, now we should start thinking about decommissioning the old platforms, the traditional platforms. Doing that is going to take another 4 or 5 years to do, because you can't just switch everything off. You have to bring clients across. It takes time. So it's at least 10 years. And in our world at the moment, that's a heck of a long time. I think traditional exchanges and digital exchanges will run in parallel with probably different products for some time to come.
Mr. Zeeb, thank you very much.
Thank you. Pleasure.